When you look at the trade war, so let's say that you actually remove the risk of trade, what does it mean for the global economy? Do we get back on track, or are there any lingering things?
I mean, we got a lot of uncertainty already, which obviously has lowered expectations. When you're an entrepreneur and you want to take you want to invest in a country, you have a 10-year view. You cannot deal with the flip-flopping that's been happening, and you just get out. So investment has stalled across most developed countries. So you need a really medium-term deal for this to come back. So at the moment we are in a kick-the-can economy with some risks to the downside. If we had a breakthrough deal, probably investment would resume a little bit, but still we have elections next year, and that gives another big piece of uncertainty. So I don't think there would be a big reacceleration in growth. We would see markets rallying, but growth still positive but average.
Janet, overall, how would you describe the state of the world economy right now?
Well, the global economy is slowing, and the risks are clearly skewed to the downside. And I suppose this is a lot of what central banks are responding to. It's the downside risks against a backdrop where things are already slowing. And given the recent revisions to the U.S. data, it was clear that the slowdown began a little bit earlier than was previously thought to be the case. So it's at the very late stages of what's already a 10-year expansion. Things are slowing down across all regions of the global economy. But there's no acute warning signals that we're going to slide into a recession. But we know that trade uncertainty is the one thing that ultimately could lead to a more severe downturn than we already have.
Janet, the Hong Kong and Shanghai Banking Corporation has a most interesting view on China. What is your GDP guesstimate at HSBC on China? Is it sub 6%?
Yes, our forecast for 2020 is sub 6%. We're at 5.8% for 2020. We do expect further policy stimulus. We've already had the announcement of, obviously, reserve requirement cuts. We expect more this year, and we expect more in 2020. We also expect more in terms of infrastructure spending. But what we're not seeing in China is this kind of across-the-board easing, let's try and deliver a big cyclical upturn. That's not what they are trying to deliver. It's an acceptance that growth will be weaker, and perhaps that these trade uncertainties are something that's going to be with us for the foreseeable future.